Good morning, everybody, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. I'm your host, Real Estate Cody, and joining me, as always, is my partner in crime, Mr. Brian Alfaro, and we've got a very special guest for us today. So, Brian, good morning to you, buddy. How you doing?
Good morning, Cody. It's a beautiful day here in Houston, but I'm a bit sad. I don't have a nickname yet, but that's okay. We'll get one.
Don't worry, we're working on it. We're going to find something. All right, Brian, tell us who's in the hot seat today, man.
All right. Super excited for our guests this morning. Today we have Mr. Mike. Mike is a 30-plus year real estate investment veteran who has controlled over $285 million in real estate transactions. Mike is an entrepreneur, author, real estate trainer, public speaker, and personal coach with strong personal resilience and a deep desire to help others live an extraordinary life. He has coached hundreds of real estate investors to fulfill their dreams. Michael began as a general contractor in the northwest suburbs of Chicago with $5 million in annual revenue. He sold his company and then took some time off to decide what to do next. Michael entered the real estate industry as a sales agent, building a team of agents and support staff that produced over $20 million per year in sales production. In 2005, Michael started a private equity firm, raising $18 million in private equity and acquired $60 million in multifamily apartments, including 4,000 units in 5 different markets. As part of the company's growth, Mike built and developed a property management division that managed 7,500 units. Mike has always believed that transparency and honesty are essential to any successful business and personal life. As a result of the 2008 world economic crisis, Mike let his guard down and let his transparency slip. The impact that had on his company and its real estate holdings left him scrambling to protect the company and its investors. Mike, good morning. How are you?
I'm good, Brian. How are you?
I'm doing well. Glad to have you with us today.
You bet. You bet. Have to help you out with that nickname, I think.
Yes.
Oh,
yeah.
You got one?
I do a radio show on Saturday morning, and my co-host, his nickname is Moose.
Moose. Oh, okay. All right. Get some inspiration there, Brian. So
I'll sleep on it.
There you go. Well, Mike, man, honored to have you on the show. It's been a pleasure getting to know you over the past few weeks leading up here. But tell us a little bit more about your background, your story, kind of how you found your introduction into commercial real estate.
Yeah, I'm passionate about real estate. I love real estate, and people say, why do you love it so much? And I think it's because I learned so much. I learned from guys like you, from doing things like this. I learned from people that have more experience and less experience. I think there's always a different way we can do something. And that's what's kept my passion fired up over the years, right? I've been in the business for 30 years. I started out in the sales side, selling residential real estate. I sold 78 houses my first 8 months in the business and went on to build a team selling 125 a year. So, I have always felt success leaves clues. So I sought out successful people around me and went and asked them what to do and how to do things. And I had this friend who was a real estate agent who made a ton of money, and 30 years ago to make $500,000 or $600,000 selling residential real estate was unheard of. And this guy was doing it. And I said, hey, could I shadow you? He said, no, you know what? I'll make you a cassette tape. And, I'm dating myself a little bit, but he's, I kind of look at it as a podcast today, but I listened to that thing over and over and over again. And I just implemented those simple techniques that he talked about. And I went out and sold a ton of real estate. 2005, I saw the market softening and shifting and decided to go into the apartment business. I'd always wanted to be in the apartment business. And what had happened was I was in the construction business. And when I was in the construction business, I did a lot of work for today, Inland Real Estate. Today, they're probably the largest REIT in the world and a real estate investment trust. But here's 4 high school teachers that buy their first 4-unit apartment building with a dream of just syndicating a few deals. And, over the course of 40 years, they're the biggest, real estate investment trust in the world in every asset class. So I understood the private equity model. I understood, hey, you raise private equity from friends, family, individuals, and you marry it with a great real estate deal. And, hey guys, provided that everything goes well, the deals go well. You stay in the middle, you make money, they make money, and you turn around and sell the deal a few years down the road. So I understood the basic concept of that model. 2005, I said, hey, want to go in this business. I started to syndicate. I syndicated my first deal. After that, I raised $18 million in 30 months, bought $60 million worth of real estate. And that was about 4,000 apartments in 5 different states. Built a property management company selling 75 houses a year, or managing 7,500 homes. So we scaled really fast. And I always say, hey, I don't really advise people to scale that fast because there's some instability that comes with that from a business owner standpoint in building a business, but 30 months is a short period of time to do all that.
Yeah, impressive amount of momentum built up in that short period of time. And, it's inspiring to hear of that success and track record you had. And, I always get compelled. I love listening to people like yourself who've been in the industry for, more than a decade. And you've seen, just this evolution throughout the real estate cycles, right? I mean, over decades. Talk to us a little bit more about that. I'd love to get your perspective on, where we're at today versus where you started. I mean, you just kind of alluding to the fact that you had 4,000 apartment units at one point for $60 million. That's a sizable portfolio, but in today's time, $60 million probably won't buy you that much real estate, but just interesting to hear just kind of your perspective on the evolution of real estate throughout the decades.
So, it's interesting you asked that. Not a lot of people ask that question. And I just talked about it the other day with somebody, but when I first went into the real estate business on the sales side, the kind of the comment everybody was making at that time was, hey, houses are selling before they're putting signs in the front yard. Signs are still vibrating before houses are selling. So, that's how fast the market was going. And I think we're in that type of a market today where it's a seller's market, where normally you might I have a good friend in Charlotte who says, hey man, I usually have 138 houses on the market. Today I have 22. So, it's a seller's market, right? But you see these trends, these ups and these downs. So it's interesting. In 2005, I saw the market was going to soften. I didn't really know what was going to happen, but I knew at that point it couldn't continue to grow like that. I've seen corrections in the real estate business, over the years, 10% correction, recession, it'll last 17, 18 months. But boy, 2008 came around and it was like a freight train hitting a wall at 200 miles an hour. It just stopped. Markets dropped. I had properties I never thought would devalue by 40%. And, you think, well, it's going to come back. It's going to come back. Well, I didn't, what did it took about 8 years for it to really come back. And I don't know that it's fully back today, but I just say that because, you talk about trends, right? I think you have to watch them, and you don't have to be an economist to watch them, right? You can do some simple research and see where things are at. And right now, when you look at the compressed cap rates, you look at the price valuations on some properties, you got to wonder what's going to happen. Are we pre-2007, pre-2008 again right now? I don't know. I don't know if it'll be that drastic, but something's going to happen. You have to think right now in place, we have eviction moratoriums that are keeping people in places that they haven't paid rent. What's going to happen when that opens up? Forbearances on mortgages. What's going to happen to that whole market? So you got to wonder where it's going. And some people I've been talking to lately are saying, hey man, I'm just going to put some dry powder on the side and just wait this thing out and see what happens. Right. So it's just kind of interesting right now where we're at. And I don't think a year ago people would have had this conversation, but today I think we're starting to hear it more. So.
Yeah, I think you're absolutely right, Mike. And it kind of brings up a point that we hear all the time in the industry that we completely agree with, is that, when you're out there and you're new in the industry and you're establishing your business, it's important to have a coach and a mentor, and particularly a coach and a mentor that has a similar resume to you, right, that has kind of lived through some of these economic cycles, that know which trends to follow and which trends to watch for, because what we are seeing right now is a very interesting time in this market cycle, and a lot of behaviors that I think are probably things that we haven't seen before. And to your point, I mean, with the way valuations are benchmarked right now on some of these assets, it can just put you in a very sticky spot if you get too rushed to get into that first deal. And having a coach and mentor with your background can kind of help guide them a little bit and make sure that they avoid some of those big costly mistakes. And we always say, look, no deal is better than a bad deal, right? So
Yeah.
It's important not to get that deal fever right now. But in sharing your story, Mike, you've mentioned so many great points, and I just kind of want to go back and highlight a few of them. You pointed out the fact of the REIT, and say the name again for me.
A real estate investment trust. So it's like a mutual fund.
Yeah, but what was the name of that one particular REIT?
It's a REIT. Oh, the name of the company?
Yeah.
Inland Real Estate.
Inland Real Estate. So it was just, interesting that you mentioned 4 teachers that started Inland Real Estate and now is the biggest REIT in the world. And the point being there is, look, everyday people just like you and I, we're out there, we're just putting out the work and making, big success stories, which is always inspiring. You mentioned in your start of your journey, you had a friend that was providing that content, that mentorship to you, and you just went and followed his script, right? You just followed his playbook and you found your own success. And excuse me, I think that's our message to people right now. And I'm saying this more and more is follow the script. Like, don't try to go out there and recreate the wheel or try to do this on your own. I mean, there's people that have paved the way for us before. Just go follow, like you said, success leaves clues. I want to follow the successful people and just do what they're doing. Right. And then I want to kind of segue into the point you made about scaling too quickly. And that's something that I find really, really interesting topic because, a lot of people do, they build off the momentum and they start growing very rapidly and it becomes very flashy and so to speak, but it can lead to a lot of mistakes. And I want to kind of get your more in-depth perception on some of the challenges with scaling too quickly.
Yeah. So that's an interesting question, and you really kind of open a door for a bunch of conversation around that, right? And I think what happens is that we in 2007, I went out and I closed on 17 deals, and it was about 2,700 units. And they weren't like just in my market. They were in Texas, they were in Alabama, they were in Indiana, they were in Ohio, and those, growing that fast, that quick, causes you to build an unstable foundation, right? I think part of what we need to do and I would never advise anybody buy a deal, whether it's 20 units, 100 or 500 units, stabilize that deal. Make sure you've got it under control. You're executing the business plan and working towards your exit on it before you go close the next one. Because what happens is if you have too many things going on, you don't have the ability to get those deals stabilized. So I bought some unstable deals to begin with, value add stuff, didn't stabilize them quick enough, had people on my team that I thought were executing and they weren't executing, and I kept growing the business where I should have sat back and just let some things kind of stabilize first, right? And then there were a couple other mistakes I made along the way. And those were like, I over leveraged, right? Everything I bought back then, we were buying at 10 to 15% down. So my average loan to value was 85%. And I would never advise anybody to do that today. Be it 65, 70% loan to value on your properties and on your all-in cost. So make sure that you are creating that stability or that foundation where if something happens and the market should hit a wall, that you're able to pay the bills. I didn't raise enough money. So I didn't raise enough money from my investors to help weather a storm if a storm came up. Today, I would raise more money, put it in an escrow account, pay simple interest on it, and just let it sit there, right? Just in case something came up. Because there's and we could talk about this a lot, but there's a spread between where your normal vacancy or loss to lease is to hey, you hit a crisis, this is where it could go. And how do you mitigate that delta, right? So you have to look at that. So those are a few challenges that as a business owner I had along the way. And so things started to spiral out of control based on those issues when we got to 2008. 2008, the world came rocking down on us, right? I'm sitting at lunch in 2008 with my CFO, and that news happened to be on, and I said, "Hey, look at this!" And they were carrying boxes out of Lehman Brothers by the hundreds. And I said, "Man, we're screwed, aren't we?" Kind of tongue in cheek. And he goes, "Yeah, we're in big trouble." So, but who knew right there at that point exactly where the world's going to go? You got Bear Stearns, Lehman Brothers, AIG, all crashing and burning, right? And the world around you is like, man, what's going to happen? Thinking the commercial market was going to hold on for a while. Fast forward into 2009, and all of a sudden the commercial market crisis, right? So, ultimately wound up imploding as an organization as a result of that. So what happened was, like I said, grew way too fast, over leveraged, didn't pay enough attention to the detail and the red flags along the way. A market, worst economic crisis, this is a perfect storm, you guys. And I wound up imploding. My occupancies dropped. I couldn't pay my bills. My valuation of my properties dropped because NOIs got crushed. And I was in markets that were dictated by the car industry. The car industry got crushed, so multifamily did. We held on for a while, but then what happened was I had some deals that were going to go to foreclosure. And I didn't want that to happen, right? As a business owner, you want to try and protect everybody. My responsibility as a CEO is to the shareholders, right? My investors. And so how do I help my investors? Well, what I started to do was move money between companies. So I'd have profitable companies. I would take profit from there and move it to non-profitable companies. And, I really didn't think there was anything wrong with it. I met with my outside legal counsel. I met with my accountant. I said, "Hey, if we do this," and they were like, "Yeah, you can do that. Just have paper trails. So when the market comes back, everybody thought the market was coming back, that we weren't going to be strung out, that, when the market comes back, just repay them the money, right?" Well, the market never came back. And I couldn't repay the money, and the investors started to get nervous, and I didn't disclose to my investors what I was doing. So ultimately, I got in trouble. I wound up being charged with wire fraud and mail fraud charges, pled guilty, and I wound up being sentenced to 10 years in federal prison as a result of that.
Wow, that's I can imagine that's kind of a hard one to swallow. And we don't like to highlight anybody's distresses or anybody's challenges, but we learn through those experiences from other people, right? And it's important for us to have people like you sharing those stories and sharing those experiences to help other people avoid those similar mistakes. But I would have to imagine that was probably not an easy story to share coming out of that 10 years incarceration, right? Can you talk to us a little bit about some of the mental fortitude it took to go through that experience?
Yeah. So, one of the things you read, Brian, in my bio is that I'm resilient, right? I think I always have been my whole life. Somebody asked me the other day, what really makes you tick? And I said, it's my work ethic. It's my work ethic and my tenacity. But I didn't feel that way when I went into prison. So I came from this space of, hey, we made millions of dollars. I made, not only did I raise money and buy apartments, but our valuation went through the roof in that 30 months. And I made $15 million, some of which I had in the bank in cash and some of which was on the books as equity, right? And was wiped out in 9 seconds when the markets shifted. So, you come from this space of what you perceive as success, people around you perceive it as success. And I'm going to tell you, I never changed my lifestyle. So we didn't buy bigger cars. We didn't buy bigger houses. I didn't fly private. I didn't have boats. I didn't have summer homes. I lived a pretty modest upper middle class lifestyle, knowing that if the market continued to do what it did, we'd cash out in the next few years and the payday would be awesome, right? So that was the end result. So I want to come back and make sure we talk about exit plan too, but because there was an exit plan on this whole deal. But we imploded. And when that happened, you go from this place of really living a comfortable lifestyle, but some things happen. You know, you get arrogant, you get greedy, you think that you kind of have the world by the tail, and all of a sudden there's this correction in your life. You go to prison. I went to prison and on a 10-year prison sentence, and realized that my life was over, or so I perceived it as being over. And I thought, okay, so this is the worst it can get, right? This is as dark as it can get. It'll come back. And I was probably in prison about 2 weeks, and my wife decided she was going to divorce me. And we thought that wouldn't have happened, and so that's a whole, we could do a whole nother podcast on that whole deal. But my wife decided she was going to divorce me, and that was it. That was my bottom. That was the absolute bottom. I didn't know how I would function day to day. And so you go from this place of millions, having a great family, living a pretty decent lifestyle, really a good lifestyle, to all of a sudden you are living in a room cell with 3 other men, in a 2x5 locker. You have 3 green outfits and 5 pairs of underpants, and you wonder what you did to your life. So one day I was probably in prison for about 5 weeks, and I walked in the gym one day, and I'm 30 pounds overweight. My life just went to hell at the end. And this kid walks up to me and he says, and I say he's a kid, but he's 20 years younger than me. But he walks up to me, he goes, "Hey, look," he goes, "Man, you got a choice. You can either do the time or let the time do you." He said, "Don't let these people beat you." It's probably the most inspirational talk anybody ever had with me. And I'm a huge John Wooden fan, and Phil Knight, and but he said, "Look, don't let these people beat you. You get this 10 years back." He goes, "You come in this gym every day, you work out, you get your physical body back." He goes, "Work on your mental, work on your relationships, and everything else in your life will change. You'll go home a better person, because here's what they can't take from you. They can't take your brain, and they can't take your desire to succeed." And it made me think that's probably the best conversation anybody's ever had with me. So I started working out. I started going to the gym every day. I started losing weight. I started feeling better about myself, taking care of myself. My 1-a-day workout turned to 2-a-day workouts. I taught myself how to play the piano. I went to college, got a bachelor's degree in theology. I taught Bible study for 5 years. I wrote 2 books and 2 home study courses, one on multifamily investing, one on property management. I taught those courses for 5 years. I wrote a book called Exit Plan. We can talk about that in a little bit, but your complete guide to multifamily investing and why you need an exit plan. And I wrote an ethics course. I was on an outreach program. I went into the community, told my story to small business owners and local area college students 40 times while I was gone. I met a professor from the University of Minnesota, and we co-authored a paper that we just had published in the Business Journal of Ethics. Now, I tell you all this because, like I said in the beginning, you have a choice. You can either do the time or let the time do you. And I chose to do the time because I wasn't going to let it beat me. I wasn't going to let the government beat me or the people around me. Because when you go to prison, it's like you die. Your life continues to go on in front of you. You watch it go on. Everybody moves on. You get forgotten about. You wonder what's going to happen. And all those people that were perceived friends are not your friends. Family disappears. And so it gets pretty dark. It's pretty evil. Then you're in a place where, picture yourself, coming from where you live and where you're at to going behind a wall and saying, now what? So I, you know, you think that's the end, but it wasn't the end. I did all this great stuff, and I wrote a business plan, and now I'm home and I'm in the coaching and training business, and I teach people how to scale their multifamily business, live a balanced lifestyle, and how to make ethical choices and decisions. Hey, here's what I really believe, that CEOs, managers of companies, men, women, team leaders, whether you're in the middle, whether you're at the back of the pack, you're faced with stressful decisions. They come up in your life, and you have to figure out how to answer those. And I think that I have an experience in my life that can help people see that if you don't look at things and you don't think things through, that your life can change like that. And it can be a pretty devastating change for people. So, I want people to really take time to think situations through in their life. If you're faced with a decision or a choice that says, man, if I do this, my life's going to implode. But if I do this, my life's really going to implode. So what's the better choice, right? So.
Wow, that's such a powerful story, Cody. I don't know, that gave me the chills.
Yeah.
In the real estate industry, we hear a lot of success stories and wins, and which is great. We love hearing those too. But hearing your story, Mike, about how you were standing basically on the top of the mountain, sort of ruling the world, in your perspective, to hit rock bottom and having to pick yourself back up, right? I mean, I think that's what this industry is all about, and a message we try to share with our listeners. Now, your situation's a little bit unique in that you really hit that bottom, but a lot of us get kicked in the teeth every day, right, with real estate and in life, and we face challenges. And what really determines our successes in the long run, when we're finally our time on this world is up, is do we get back up and turn those lemons into lemonade, right? Try to make the most out of our situation. So just a powerful story. It left me speechless. It's awesome.
Yeah. Well, I hope it makes a difference in somebody's life. That's always my goal when I tell it, is that it makes a difference in somebody's life.
Yeah. Well, Mike, again, I want to go back and just thank you, number one, for sharing that story and being so transparent about it. Because again, I think for people like us, that are newer in our entrepreneurship journey, this is an important message that we need to hear about being patient, being wise in the decisions that we make. And to your point, I think I can imagine that you had no ill intent in the moves that you were making that led up to this, wire fraud and whatever else, right? I'm sure you weren't thinking about, oh, I'm trying to scam people. It was more of I'm just trying to keep the business afloat. Yeah. And this is how I think is the best way to do it. And ultimately it end up leading into, your story. But the point being is, I think when things start falling apart around us, we tend to panic and we tend to make decisions that in our mind we think is the right decision, but ultimately end up leading to very, very costly mistakes for not only ourselves, but those around us. And in our industry, as investors and as syndicators dealing with multiple investors and their capital, it's very, very important that people digest this message and understand that, you just be patient.
Yeah. You said a lot there, and it's very true. You've got to do things calculated, think things through. And it's important to do that. So I'm very transparent about it today. And I want to be, I struggled when I first went public at the first of the year this year with my story. I struggled with it. It was like, God, do I really want to do this? But the number of times I've told it, and the more I tell it, the more realization I have that, what, I'm helping somebody. That you said it, Cody, that you got, and Brian, you too, gave you chills, right? But when you think, wow, I could have all this success, but what happens along the way? That's what we have to pay attention to. Who do we become along the way? What happens along the way?
Yeah, you're absolutely right. And I think, Brian, you'll probably agree to this as well. Some of the best lessons that we've learned along our journey has been through mistakes, especially the ones that cost
Absolutely.
us a lot of money or maybe even a lot of time in your case.
Yep.
And to your point, when I hear people's success stories, it's motivating and yes, it's inspirational, but I find it very much more resonating to hear a story like yours, where this is a bad point in my life from some decisions that, were made and it led to X. Those are the stories that resonate with me very well, because I know just in the back of my mind, I never want to be in that predicament, because it's just, I can't imagine how that would impact my life, the life around me, my wife, my kids, everybody that I in my circle. Like, so I would never hope to be faced with that. So again, I appreciate being able to learn from your experiences and your story, and just want to really emphasize your point too about what you just said about transparency. And I think in our business, in our industry, you can't be transparent enough. I feel like even when times are not going well, the more that you're transparent and the more that you're open about it, the more that people are going to trust you, even if the outcome's not great. It's a relationship business, right?
Right. Absolutely.
Yeah. So,
Absolutely.
whew, man, I don't know, Brian. I almost had to stop it right there.
Hey,
But
can I talk about exit planning?
well, yes,
Absolutely.
please
Yeah.
do. Yeah, yeah.
So while I was gone, one of the things I did was I wrote a book, and I wrote a book called Exit Plan. And why did I write it? You guys, we talked a little bit at the beginning of this show about coaching and training, right? Over the years, I've spent hundreds of thousands of dollars on books and tapes and seminars and coaching, um, to kind of leave some of these events empty, like I'm missing something, right? And some really great coaches and trainers, but nobody ever talks to you about how to get out of a deal. Everybody always talks to us about how to get in, how to buy it, how to operate it, how to find it, all great stuff, all things that we need to know how to do. But nobody ever talks about how to get out. And that was my premise around exit planning. So when I sat down and started thinking about writing a book, I thought, man, let's talk about the structure of getting out of a deal, because it doesn't always mean that you might sell out, but you might reposition yourself, restructure the deal, do something different. When you run a 10-year spread on a deal that you're going to buy, there's invariably a sweet spot somewhere, 7, 8, 9 years, where it's your most profitable point. Why not do something at that point? Why not pull your profit off the table? So I talk a lot about that. I talk about deal structures and things like that in my book, but I always believe that we need to talk about the end in mind. I read a book recently. It was like 379 pages, and I got to page 370, and there's a little 8-line paragraph. This is a famous author too, a real estate guy, and he said, the bold print says, "This brings us to exit plan." And he goes on to say, after all your hard work, it's time to capitalize on your profit. And I'm like, man, shouldn't you have thought about that before you ever got to the closing table on the acquisition side? So I say this because I want people to be aware of it. So, hey, I wrote a book, Exit Plan, your complete guide to multifamily investing, why you need an exit plan before you buy. And you can go to my website and download a free ebook. If you're like me and you like to read and dog ear the corners and highlight and the margins and that, you'll have to buy a copy of the book. But you can download a free ebook, and that's at mycoreintentions.com/exit plan. So.
Awesome. Thanks for sharing that. We'll make sure that's in the show notes and make sure we reference that for all the audience members. But it's interesting. It's kind of interesting that you have to have a book just on that topic, right? Because it almost seems like that should be real estate fundamentals, right? You never want to go in without an exit plan. I mean, I want to know what is my strategy before I buy something, or else it's just speculation, I guess, in a way. So I can't wait to dive into that one. That one's going to be good. So. And tell us a little bit more too about, I think you mentioned, coaching on ethical choices and decisions. I would like to kind of dive into that a little bit more too, and kind of, what's the teaching and coaching when it comes to making those ethical choices?
Yeah, that's a great question. So I wrote a paper with a professor from the University of Minnesota. Uh, and it just got published. It took us 2 years to write this thing, but by the time we finished it, and then it went back and forth between the editors, but it just got published in the Business Journal of Ethics. We also wrote a set of teaching notes with it, and you can find all this on my website. We also wrote a set of teaching notes with it that gets taught at the college level for forensic accounting classes, for sales and marketing classes. So we actually developed a lesson around it. But I taught ethics in prison. How ironic, right? It's like seeing a locksmith truck in a prison. Locksmith. It's kind of one of those ironic things, But here I am, charged on wire fraud and mail fraud charges. But who better to teach, right? Who better to? And so I crafted a course that I teach, But my big point is that it's like, what choices and decisions are you paying attention to? What are you looking at? Where's your responsibility lie? And how do you ethically, in full integrity, make decisions in your life? So, you know, eh, here's a quick example, right? That I talk about, and just picture this, guys. So it's the end of the year. You send all your taxes over to the accountant, and the accountant calls a couple weeks later, and he goes, "Hey, Cody, I see that you have about $700 in travel expenses and receipts that you spent last year. But I just want you to know that the IRS will allow you $2,500, and they won't ask a question about it. So what do you want me to do? You want me to take the 700, or should we take the full 2,500 deduction?"
Ooh, I'm gonna stay in the lane there and go
Yeah.
with. I'm just gonna keep the 700.
Yeah.
But it's very enticing to go with
Yeah.
2,500.
Absolutely. And you'd be surprised. You put a room of 30 guys together, all right, who come from all walks of life, white collar guys, drug guys, and you sit around and you have a conversation and you put a question like that out, you get a very diverse set of answers. And, there's people that say, "Well, I take the 700. No, I'm going to take the full 2,500. Hey, you're in prison because of the mistakes you made. Really? You're going to still take the 2,500? And I'm not here to condemn anybody by any means, but, and then there's the people that say, "Well, you know what? Let me split the difference. So I'll take the middle." But here's the deal, right? How many of us walk in the gray in our life a lot? It's not totally black and it's not totally white, but we walk in that gray box going, it's not really wrong, but it could be. And, do we listen to our gut and pay attention to what's going on around us? So I think that oftentimes we need to really pay attention to what color we're walking in.
That is such a great point as well. And man, it just ties in so perfectly, I think, with the point we were making earlier about being transparent as well, and just I don't know, just being sound in your decision making. And you're right. Listen, I'm sure a lot of people feel like they're riding a high, life is great, and not realizing that maybe they're walking on some unsturdy ground. And it's unfortunate that sometimes we don't realize just how much the decisions we make impact us until it's too late, until we find ourselves in a grave situation. So I really, really appreciate that message.
Yeah, you bet.
But well, Mike, man, just really, really powerful story. I'm inspired by, your tenacity to endure such a hardship in your life, 10 years in federal prison. But in those 10 years, it's inspiring to hear that you became a coach, a mentor, you've put together resources, you're sharing this story and messages to help people like Brian, myself, and all the other ones out there that to avoid these same mistakes and just be better people in general, not just investors, but just be better people. Because I think these messages actually resonate just to life in general. So thank you, man, for sharing that story. Really appreciate that. And I'm glad you're here with us today, sharing your message.
Yeah, I appreciate you guys having me on. And you know what? Isn't it true? It's about who we become along the way. It's not about what we accomplish. It's not about how many apartments we own, how much money we make, the cars we drive. It's about who we become along the way. And, what can we do with that for others? So.
Yeah,
Great.
you're absolutely right. I mean, we get hung up in the glamour of all the unit counts and, money made and whatever. But ultimately, at the end of the day, it's about who the person is. And so really appreciate that and respect that. So, well, Mike, we're getting near the end of our time. And I mean, I don't feel like 45 minutes was enough, man. I feel like we could carry this on, but I'm really excited to get this out and share this story and hope people connect with you after listening to this. But before we go, we got 4 more questions for you, and then we'll kind of wrap up from there.
Perfect.
So, well, Mike, in your studies, I mean, you're helping other people to become better entrepreneurs, better people. But what do you like to do for your continued education to further your own investing?
Yeah. I love this. Like I said early on, I learned from you guys too. So I like doing the podcasts I do because I learned so much from the interviews. And I think you guys in a few weeks here are going to be on one of my shows, and I'm looking forward to that. So, my education is around that, and I read. I love to read. I've read 1,500 books in the last 20 years. And 400 of those I read while I was in prison. So, it's kind of been interesting, but, so that's really what I do for my education.
Love it, man. Love it. Well, we've kind of talked about this next question in detail, but what have been some of the lasting lessons you've learned along your journey?
Yeah. Think things through. Don't grow too fast. Keep your eye on the ball. And one thing we really didn't talk about, but, uh, I should have listened to the people around me, right? Other people see things that we don't see. My wife saw things. My attorney saw things, told me that they didn't trust the guy I was in business with and that things were going on. And, and I'm not minimizing in any form or fashion what I did, but you have to pay attention to the things going on around you.
Wow. Wow. Well, and to piggyback off that, what advice would you give to the listeners to help them grow their businesses?
Mm. Yeah, continue to get educated, get a coach, get a mentor, get somebody who could, a lot of times people say, oh, I don't want to pay the money for coaching. Well, can you afford not to? I think coaching's been priceless. When I look back, I spent $1,000 a month every month for 20 years. Okay. So somebody called me out one time because I have a quote in my book that says I spend hundreds of thousands of dollars on coaching and training. Well, I'll let the listeners do the basic math around those numbers, but, um, spend the money, go get insight from somebody else, and you learn and grow. It's not just about the coaching, but it's about the accountability and the execution that that happens as a result of you having skin in the game.
That's such great advice, Mike. I really appreciate that. And if I can, I want to kind of use your story as a reference. Just a roundabout estimate. What do you think those 10 years in prison cost you financially?
Oh.
Whatever sum, just throw out a number.
Yeah. So let me just clarify one thing, Cody. I didn't spend 10 years in prison. That was my sentence, but I did spend 8. Okay. So you get there's some time off for good behavior and stuff. So, what did it cost me? Well, when I was selling residential real estate, I brought home about $300,000 a year. I took a pay cut to start this business that I started. I brought home $120,000 a year while I was building the apartment business. So if I just looked at that simple math over 7 years, probably at least $1 million, right? And that doesn't include any of the deals that I could have done or a business I could have built and sold. So, but what it really cost me, and that's just on the monetary side, but what it really cost me was my family. So,
yeah, and that's family. Obviously, that's just something you can't replace. But going back to your point about the coaching, is it, people, they get caught up on the initial investment, but a $20,000-$30,000 investment for coaching could save you millions of dollars from making a costly mistake.
absolutely.
And most importantly, the people around you. So it's worth it. It's worth it. So
Yeah.
Well, Mike, great way to end the show, man. Tell the listeners how they can learn more about you, get connected with you, and take advantage of all these great resources you mentioned.
Yeah. So connect with me on social media. You know, I'm Instagram and Facebook and LinkedIn. I'm a huge networker. Reach out to me. I love to talk to people and have a conversation and see how I can bring value to your world. And you can direct message me at mike@mycoreintentions.com.
Awesome. Mike, thank you again for sharing your story and being an inspiration
Thank
to
you,
all
Mike.
of us. Thank you for, everything that you're doing for the community. And we definitely look forward to staying connected.
Thanks, guys. It's been an honor.
Yeah, thank you.